In today's video, I'm going to explain how I dollar cost average in, well, really BORSOG, buy on red, sell on green, and how I took a couple of positions here and turned quite a neat profit just in this little area. I'll explain my thought process behind it. It should give you a lot of insights that will be useful. Before we get into that video, it's really good to get a daily view across the markets and see what they're doing. So let's get into the heat maps and all of that great stuff. Hi everyone, I'm Ken from CryptoTradingKS. If you're new, a very warm welcome and welcome back CTKS family. Here you'll learn how to become fearless inside financial markets, to assist you to become more of a financial and emotional blessing to yourself and those you love. If you like the content, please subscribe to the channel and don't forget to smash that like button. All the indicators that I use on the daily video come from the service inside ctksmethod.org. Let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS. In this video, I'm going to talk about how you can lean into trades. Let's just have a quick look at Bitcoin. We've seen the price action just been coming down, and it kind of just turned around recently, but overall it's not been looking too healthy. In fact, when we look at Bitcoin on a 24-hour basis, it's down. On a 7-day basis, it's down. On a 30-day basis, not going so well. The key is, can you make money going long at spot under conditions like this? The answer, yes you can. Before you lean in, you really have to understand where the market structural levels are. Understanding market structure is absolutely critical, because then you will know where the ceilings are on price and where the safety nets are. And you can see here that we came down into safety nets and we just jumped up into a ceiling and it's backed off. But how do you take advantage of that? That's the real key. Knowing where your structural levels are helps you to dollar cost average in, which is basically buying on red. But there's a slight difference between buying on red and selling on green. What we're trying to seek to do is to always turn small annualized return on investments, and you'll find that they can really add up. Now, what you can see here on Bitcoin, and this was just a screenshot just taken from my trading platform. You can see I was dollar cost averaging here and starting to sell up here. These little red arrows, they're sells. The little green arrows, they're buys. One thing that I found really interesting, I had a trigger inside the market because I wanted to know if things were potentially turning around. As soon as that order got triggered, I got notified, and then I said, this looks rather interesting. I'm going to go in here and I'm going to show you these two buys here and these two sells there. One thing to note, what I'm specifically doing, I sold and then I'm buying back, and I'll just explain. I'm recycling this particular money from these two sells here into these buys down further. When you first start trading and investing, and it doesn't matter if you're investing or trading, knowing where the structural levels are vitally important. You'll note that as I just leaned in around this area, I knew that we were overcoming structural resistance. We had the potential to come back for a retest, but I was feeling fairly confident that we would go for it. And that's because I do the cheat sheet. That basically means that I look at much more than Bitcoin. I look at the DXY, I look at yields, I look at junk bonds, I look at the SPX and the NASDAQ futures, I look at all sorts of things. Of course, total crypto market cap. You might notice that one of the things that I did, I bought around this particular area and I sold just above here. That's significant. I didn't sell in there, I just sold above here. And I'm going to go through the trades. For the first trade, I bought at 39,311, and one thing that I always do, I'm a big believer in transparency. If you have transparency, you know what's going on. So you can see I bought at 39,311.20, just this one, and I put 5,000 US in. You don't have to put 5,000, you could put $10. It really doesn't matter about how much you put in. In this case, I was leaning in because I had a bit of a trigger. One particular level sold, and I was thinking, oh, this looks pretty good based on things that were occurring inside the market. But this morning was quite interesting. There were a lot of people saying, oh, Mt. Gox is going to dump on the market. FTX is a bit of a problem and all sorts of problems. And I inverted that narrative and said this is the ideal time to get in because I just looked at the cross-referencing charts in Tier 1, Tier 2, and Tier 3. What we do is, as soon as we get a fill, we place the sell order. Now up here at this 40, 180 and 10, you can see that that's a sell level. Let's have a look. 40, 180 and 10. All right, and so that was a $110 margin in between those very two minor spots. This is like literally nothing. That's a bit of a blip. Let's have a look into the mechanics of this trade just a little bit more. The buy was set at 9:16 in the morning. The sell was triggered just a little bit before midday, 11:52. I'll just blow this up a little bit more so that you can see it. And we remember that we put about 5 in and got 51.10 back. You can see the gross annualized return on investment is way better than 100x. One thing that our community knows, you never ever look at absolute return on investment. You look at annualized ROI. That's the secret sauce. But that was only one trade. What was the second trade? Let's have a look at trade number 2. In trade number 2, what did I do here? This was about 9:30 in the morning. And that was 39,354.21, just this red area there. And that was also a $5,000 trade. So I put two $5,000 levels into the market. I felt fairly confident as to what was happening inside the market because I make sure that I understand how all the charts are intercorrelated and interconnected. But more importantly, I understand the structure of the chart. When I was placing the buys in here, I had a feeling it was not going to go too much further than this specific area. And that's in fact where it stopped out. Okay, let's have a look at the sell. For the sell, that was at 40,222 and 22 cents. Pretty cool. At 11.52. And we're going to look at those annualized ROIs in just a second. You can see a buy here, a sell there. I'm not trying to pin the tail on an upward move because upward moves are always recurring. So you have some down, you have some up, you have some down, you have some up. It's always the concept that the top and the bottom are dynamic. They're not static. Checking out the annualized return on investment, we know that we went in at 927, came out just a little bit before midday. The gross annualized return on investment is quite staggering. A lot of people search out 100x trades. We can do much better with BORSOG, which is simply buy on red, sell on green. The reason and the logic here is that we get into a position and then we scale out of that and scale back in to ride the waves. We know that this is fairly strong resistance here and it has the potential to overshoot. One thing you always want to bear in mind, if you don't know where the structural levels are inside your price chart, in this case we're looking at Bitcoin, but many other trades were done across many other cryptos. If you don't know, if you're simply guessing, for example, if you were looking like this and saying, oh, I think I'll go in now, that could be very, very dangerous. It could be dangerous because you don't know where the structural resistance and structural support levels are. Now, how does structure differ from lines that you would just draw up on recent indicative price? We know that Bitcoin has been trading in excess of 5,200 days. That's why we need to mark up structure based on all of that price history, not just a little bit. We don't come in and say, Bitcoin's been trading for about a week, so we'll look at 7 days of Bitcoin's price data. This is why a lot of people get caught on the wrong side of the percentage, and unfortunately they lose money. It's also quite interesting when we note that I was coming in here, I already had my target sells up here and 2.21% was more than enough for me. And then I took that $10,000 and I layered it back into the market. As I layer in and get filled, of course I put sell levels immediately on those particular fills. And when they fill and when they sell, I'll just recycle the money again and again and again. Please note, you don't have to put 5,000. That's quite a lot of money, and this is all going at spot. It is sufficient to put $10, put $5, put $20. What you want to do is to get into the swing of the market, and then when you feel you're synchronized, you can lean in more heavily. But I would just suggest you take it really easy as you're getting started. Right now, we can see that the price of Bitcoin is coming up. Now, why is it struggling? Because it has all this overhead resistance at that literally where it is, that 40,107 mark. But if it gets through there, wow, it's going to look really nice. It's going to do very well. Now, what if I didn't put 5,000? What if I put 10 or 50 or 100,000? That's how you scale your results up. But the other thing to just bear in mind, you need to always get synchronized first before you scale. And if you don't know the structure, you simply don't know where price will hit a ceiling and where the safety nets are, where it becomes safe to get in and safe to get out. You just want to push probabilities in your favor. A lot of people will give you narratives, just ignore them. One of the best narratives to actually have is an inverse narrative on price behavior. If everybody's saying the price will come down, you're probably pretty close to a reversal of some sort. If everybody's saying the price will go up, you're probably pretty close to a reversal of some sort. The price will probably go down. Inverting narratives is a really good thing to do. Of course, when you know the structural levels inside the market, everything makes sense. You're not trying to use backwards looking indicators, and I'll just give you a bit of a feeling as to what I'm talking about. If you use a moving average, and it could be a 20-day or 20-period moving average, it could be a 50 or 100 or 200. You could use Fibonacci retracement levels. You could do all sorts of things. And if it works for you, hey, go for it. But the problem is, those kind of tools don't actually take into account the personality of the chart that you're looking at. Ken, what are you talking about? Personality of the chart? Yes, every chart has a different personality. Some are exponential. Some are like watching grass grow. Bitcoin is exponential, but Bitcoin is slow compared to other projects. What you really need to do is to understand what the structure is underneath. And if you understand the structure, you're not looking at a price chart like this saying, oh, I don't really know where the structure is based on all of the price history. You need all of the price history to understand structure. When you know things like this, you could say, that was coming up fairly strongly, but all of that resistance was there. That was likely to push the price down, and it did exactly that. This means that when you have this level of structure on your charts, you have what's called a forward indicator, not a backward indicator, a forward indicator. That means that you can tell where it's going. If it's not going above, it's going below. If it doesn't go above, it's going to safety nets below. And if it gets above this, it's headed to the next one. If not, it's headed to the safety nets below. And if it fails this one, it's headed down here. It's a very easy thing to look at a price chart from that perspective. One thing to bear in mind, I turned 2.2% on 2 trades where in 24 hours, Bitcoin has actually gone negative. And if we look at the 7-day and the 30-day, it's also negative there. If you have the structural levels on any price chart, you can make money because you know where price is moving. And you can see here, it's always moving in a wave. It's always coming up and down, up and down. This is the nature of price. And if something is coming down, you know where the next structural support levels are. Not the random support levels that most people draw, but the structural support levels. Structural support levels are also called SLs, or Stanfield levels. When I look at the trade history of across the past 24 hours, well, it just resets at midnight, so it shows from midnight on. This particular trade with Solana was a 5.21% trade, with Doge 4.2%, with Bitcoin Cash 4.63. These were 2.2 each. Ethereum, quite nice actually. Bitcoin 3.37%. ADA was 4.6%. This Solana was 6.42%. This Litecoin was 2.79%, and this Bitcoin Cash was 4.69%. The thing to note is those percentages were made in a time where the markets were coming down. It wasn't as if the markets were just going for it. They were going for it in the wrong direction, and I was going long at spot. Just going down a little bit further, Litecoin came down 4.61% and Bitcoin Cash down 1.33%. You'll find that it doesn't matter what the percentage is in here. If you buy correctly, you will be doing very, very well. When the markets are like this, I just refine my expectations to around 7% and below, because the percentage depends on the specific project. Solana is known to move quite substantially intraday, whereas Bitcoin is a bit slow. Therefore, as a quick summary, always know where your structural levels are inside the market. If you find the market starting to turn around and you're getting a confluence of factors that shows that a big surge could be incoming, you should take advantage of that. You don't have to go all in and more. I would suggest that you absolutely never ever do that. Instead, starting small and scaling is the best thing that you can do. And if you've got a lot of turbulence, just lower your average buy price. That is, the positions that you put into the market. It's also really important that you look at total crypto market cap. And total crypto market cap has around 3,900 days of data. What we can see currently is total crypto market cap is starting to challenge this structural resistance at $1.512 trillion. This is really good news, because if it gets through there, this fresh air gap up is going to move the alts in a big way. This is the kind of knowledge and insight you want to have before you place your trades. Another thing to consider when you're seeking to lean into a trade, always remember financial markets are full of noise. Even though Bitcoin has now come up 0.5% according to this website, what we've seen, you can do much better than that from intraday price movements. This doesn't make you a day trader or anything like that. You're just a price surfer. You're surfing the waves of price. But the critical thing, you must know the structural levels of what you're getting into. We looked at total crypto market cap and Bitcoin structural levels, but there are a lot of other structural levels that you do and should look at, because it will put a picture together for you. When you have an understanding of structural levels, you're not going to FOMO into anything, and you can look at the price and the price movements with a completely different view. For example, if we just pop on the indicator, we can see that Bitcoin's price was coming into structural resistance. What happens at structural resistance? And you saw how good that candle was. It was like fully green. But understanding market structure, you look at it and say, yeah, it's got a very good potential to just back away from that, at least consolidate, potentially come down to that 39,898 mark. If the bulls continue on, just consolidate and break through it. Now, if it gets through it, look at that fresh air gap. It's literally up to 40,800. That's awesome. You can see you can make a lot of money just in between tiny weeny things. They're just not even on the not even a blip on the radar. The first key is please understand where the structural levels are. If you don't know where the structure is, you'll always be guessing. You'll just be looking at something and saying, I don't understand this chart because I don't know where smart money is going to lean in and buy, and I don't know where smart money is going to lean out and sell. These structural resistance levels They're selling levels. The structural support levels are safety nets, and it will take you a bit of time to read them. But the more safety nets you have underneath price, the more confident you can be of scaling in. That's what it's all about. Potentially, the most difficult thing that you will learn how to do is to raise your synchronization score. The first way to do that is to understand you control the trade or investment, but the market controls the return. The return is always based on your knowledge and your courage. If you have 3 simultaneous strategies playing out, that is, you know what you will do if the price goes down, goes neutral, or goes up. You already have certainty. You don't need to find certainty inside the market, only in yourself. I had certainty that there was structural resistance overhead, and I just wanted to maximize how much I could get out of that specific trade. You will find that structural levels give you a degree of certainty. They tell you at least where the ceilings and the safety nets are. If you're dealing with other cryptos, always keep Rule 45 in mind, because no alt can escape Bitcoin's gravity. If Bitcoin is going up, you've got a 99% probability that that alt will be going up much further, much faster. If you would like the structural indicator for TradingView that I use, it's available from ctksmethod.org. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.